Hi everyone, it's Sean from STK Markets again with you today. Listen, we've seen some really great success in the market of late. We've had our gold stocks, we've had our tungsten stocks, and we've seen these commodities really rocket. And what we've noticed with EQR, which has gone through the roof, that it's getting into full-blown production, and that share price has really been moving. So what we've been looking for in our portfolios is a company to take advantage of the current record level gold prices. They just keep going up and up and up. So what we've done is we've looked through the stocks that are in the Australian market. We've found a company which we're quite close to the directors who have been running it, and they're about to literally pour gold in these current prices. Where we've done our research, where we've done our due diligence, we know that the shareholder register is very sticky. We always need to have good shareholders when we're investing because we want the others to be as well. So that's a big tick for the company. It's definitely got management that can roll up their sleeves, get dirty, and get involved to make the project work. And they've got a lot of shares. They represent about 36% of the register. So the good thing is we know we've got the right commodity, we know we've got the right team and management, we know we've got the right shareholders. Let's now have a look at a company called Great Divide Mining, which is a company, as I said, we've been following. We put a little bit of money into it in August last year. We've watched them do what they said they're going to do, so we can see that they've got a proven track record of execution. But I'd like to introduce Justin Haines, the CEO, and Simon Tolhurst, a non-executive director, here today. So, guys, thanks for coming. And Justin, nice to have you here. Can you just give us the lowdown on who Great Divide are and a quick overview of your major project?
Thanks, Sean. So, Great Divide Mining listed August 2023 at 20 cents. Since that time, we're proud to say we've never been underwater. We've gone from 4 projects to 5 projects in that time. The 5th project we've recently taken on is the Challenger Gold Mine in southern New South Wales, near just west of Tumut. Great location, tier 1 location. It's a fully permitted mine site. It has a plant, it has existing 180,000 ounces of resources in the ground at varying stages within the resource categories. Production rate there, we're currently targeting this quarter. We're looking at, say, 400, 500 ounces this quarter as we just ramp up in that commissioning phase, and then moving up to, say, 800 to 1,000 ounces next quarter, 1,200 the following quarter, 2,500 the following quarter. The interesting part about the project is at surface, not included in that resource category, is 4,000 or 5,000 ounces of gold in mullock and remnant ores that are sitting around. So that's the material we're going to be using for commissioning that plant. The cost of production from that mullock might only be $1,000 an ounce. That's 1,000 Aussie, by the way. It's a low cost entry into gold mining. If you look at our market cap and you put some of those numbers into it, you'll soon see, draw your own conclusion as to the amount of revenue we'll be producing this calendar year coming. As I said, the site is fully permitted, but from a risk perspective, what could possibly go wrong here? Well, the gold price could drop. Okay, at the moment, we're talking about initially 1,000 Aussie for that first 4,000 or 5,000 ounces. When we go underground mining in the next, within this next year, that might jump up to 1,500, 1,600, even 2,000 Aussie per ounce. But it's still a far cry from where the gold price is now. The gold price has got to tank a long way to get to that. The only other things are the diesel price going up, but we're fully permitted. We've got all the approvals, all the DAs, and we've got the people in place to run it. The plant is commissioned. We've been working on that plant for almost a year now. There's no more major capital to spend on that plant to get it to run at these rates.
Justin, it sounds like you've got a project which is about to hit revenues as we discussed at the beginning. Those revenues are huge. I've just done some calculations, and you're looking at your market cap is lower than what you're going to produce in the commissioning phase of this going at 5,000 ounces a year with a 100,000 ounce JORC, the ability to drill out and increase that JORC. But you've got a 5-year mine life, and I haven't done the numbers on the 25,000 tonnes a year, but it just looks huge. This could be a multi-bagger very easily.
And we believe so. We think it's a cracking opportunity both for the company and for our shareholders. And just touching on that blue sky you mentioned, there's 100 odd thousand ounces in the operating mine area right now, but that taps out only 180, 200 metres below ground surface, and it hasn't been drilled out along extensions either. And that's only the first one of 4 reefs that are on that inside the mining lease. So the blue sky just within the current mining lease is massive. This is a generational project. It's, let's look to the future where it could be a 1,000,000 ounce project at some
But when
point.
we're looking at investing, Justin, we've got to look at where our money's going. As I said, we've got the right investors, we've got the right management, which we'll touch on later in the video. But we also look at the capital requirements for the company. A lot of investors ask, will we need to put money in again? And I'm looking at your revenues here. It doesn't look like you'll be coming back to the market cap in hand. This placement should be it if you hit all your bases and start these revenues. And the way I'm looking at it is rather than coming back to the market, and I hate to put words in your mouth, but there could potentially be a divvy as opposed to a cash call because of the revenues that you'll be generating. It's just, it looks too good to be true, but the gold's chalked, you know it's there. The plant, I mean, how complex is the plant? There's a couple of spinners. Your management team are well versed in this space. It's not their first time doing this either. You've got a lot going for this project without much risk.
I think you're spot on there. I can't refute any of your points. The project is an amazing project, and the benefit it will bring to the company and to our shareholders is phenomenal. We've been very lucky to end up with this project when we have, with the gold price on the rise. A simple plant, great team to work with, both at the corporate level and on ground. It's a great thing. Talking
I've gone
about
through the last 2 years of your corporate work, I mean, on the ASX of your listings, and I've noticed that the top 20, there has been movements, but it's only on the buy side. You've had 2 years on the stock exchange, your share price has held well, and you're going to revenue in these markets. I mean, it's a story which sort of sells itself to me in terms of your valuation and the amount of money to be raised. And that's why there's not a huge discount to the last traded price for this raise, because you're about to turn the taps on and literally be pouring gold, which will create revenues. When do you expect your first check? Because that's what people always ask. Is this a 2, 3 year away? Is it 2, 3 months? Or are we talking when are you going to get revenue into this company?
it's that 2 to 3 month type window. Once we present a parcel of concentrate to the gold mill, it'll be a month or 6 or 8 weeks after that when the first check will come. But obviously, that's the first check, and it's a continuous process. So it's the first check, and there'll be a check every month from then on, and
So it just
hopefully a bigger and bigger check each month.
So well, it looks that's in the terms of your modelling, you'd be growing as the plant comes online, you push more through it. And particularly if the gold grades increase over time when you're actually going into the mining part of it or to the processing the mined ore, can this thing increase in capacity? Like if you plug some holes and you do increase the JORC, you go from 100,000 ounces, which are
Yep.
currently JORCed. I mean, you could do a 20-year mine life, still make very good, almost your market cap for 20 years, which isn't a bad investment. But you can fast track that if you expand it. Can we expand this without putting a lot of capex in?
Very simply, so these spiral banks we've put in. So we've put in one bank of spirals now, which is enough to do this 25,000 ounces per annum capacity. That bank of spirals is only 25 grand. With all the pumps and bits and pieces go with it, totals about 100 grand. So we could double capacity of that plant with another 100 grand. Obviously, it needs a little bit of extra crushing on the front end, a bit more mill capacity, but we can tweak the current crushing and the current milling to improve that throughput already. It's a very simple process plant and a cheap thing to increase the capacity.
So you've got your permits, you've got the ability to process. So all you've literally got to do is pour the diesel in the machine and turn it on.
And the rock in the front end.
So that's it. There's no
That's it.
waiting. You're literally going to be crushing rock as of Monday, Tuesday.
Correct.
So probably when you're watching this video, they're crushing rock now.
Yes.
Okay, so the funds that you're using for this raise, I noticed there's not much money until in the quarterly at the moment to provide the working capital needed, that if there is any red herrings, which you don't think there are, because I'm sure you've been working out the plant, it's just to give you that buffer if anything goes wrong, you're well funded to keep it moving, but you don't perceive that being the case.
Yeah, that's correct. The reason for this raise is just to ensure that we have the operating funds there prior to that first check. It's as simple as that. Obviously, a few extra bucks to sit there just in case a pump goes pop. You need to have that, 40 grand or 50 grand there to replace that pump or that bearing or whatever. So it's purely an insurance policy and to ensure we have that operating cash flow sitting there to keep it running until the first check. After that first check, that's it.
So what we're looking for is you're like EQ, where we saw that increase in profitability for the future, for the quarter. We'll be looking at your quarterlies, but one thing we have talked about is that you'll be plugging holes in this tenement to increase the resource. So we've got like the P in the song curve. We've got exploration upside as well as revenue upside, but we don't have to wait for the plant to be built because we're already there.
That's exactly it. We can take advantage of those incremental increases in resource as they come to hand.
Okay, Justin, thanks for your time. What we might do is pass on to Simon Tolhurst to let us know who's behind Great Divide to give us confidence as to how we move this thing moving forward.
Thanks, Sean. Hello, everybody, and thank you for your time. Obviously, having a fundamentally good business, which we have with rock in the ground and a processing facility available to us, is really important. But you also need to have the people sitting behind it to execute on that plan. And I'd like to think we do have that. And hopefully, you walk away from this knowing that you've got some people there who will make it happen. We've got Paul Ryan, who's our chairman. He's a diesel fitter by trade. He's had any number of successful businesses already. He and his family started Steelforce from zero. They ended up selling that to Gupta for $70 million. He and his family started Choice Petroleum. It had something in the order of 28 petrol stations through Queensland, which they built up and sold to Archer Capital, and that became Puma Energy's Queensland arm. They've run businesses this size before. Paul himself has been down commissioning this facility together with his brother. And that's the good thing about the people who are in this organisation. We have a set of skill sets that all complement one another and we stay in our lane. So Paul is all about hands-on, making sure that it works and it works efficiently. Adam Arkenstall, also a non-exec director, former auditor. He ran his family's business, freight forwarding business, and ran that through to sale successfully. He runs his own freight forwarding business now called Butler Freight. They control 5 to 7% of the Melbourne container freight transport out of Melbourne Port, and he has a similar percentage of the market out of the Brisbane Port as well. Justin Haines, who you've just heard from, geologist, mine engineer. He majored at uni in metallurgy. He knows what he's talking about. He's worked for all the majors all around the world. He was a service group manager for GHD. He's our subject matter expert. And then you've got myself. I just look after governance. I look after the legal side of things. I was a lawyer at a national law firm, lawyer for 30 years. I sit on this board and make sure that things run properly. So that's the people behind the scenes. Very light on in terms of staff numbers. A lot of our family and friends are in the stock here too. So we're out there to make sure that this is a massive success, not only for ourselves, but for them.
Thank you, Simon. It looks like you've got the three ingredients that we like to make the cake or the investment there. You've got the asset, you've got the management, you've got the existing shareholders, which we're happy to join. And I'm thrilled we get this opportunity. It's through our relationship with Adam Arkansas and Paul Ryan and knowing Justin that we've got this investment. And I think we're quite fortunate to come through. There's already very good demand for this investment, so you need to be very quick. I don't envisage this one being open for more than a couple of hours when we send the email out to go live. I know my team, my partner's just messaged me on this video that he'll be putting some money in. So if you've got any questions, please let us know. Read the literature. As always, send us a bid via email. They are binding when you bid. And I look forward to speaking to you soon. But thanks, guys, from Great Divide. I really appreciate your time today. I look forward to working with you in the future and updating investors like we've done with our other shares with how the progress of the company goes. And I think there'll be a hell of a lot of news flow in the next couple of months just with the revenues going forward. Then we've also got that exploration upside with the good management and good shareholders. Everything's there to make this work. So I look forward to hearing from you soon. Thank you.
Thank you, Sean. I very much appreciate your time and that of your audience as well. Thank you.
Thanks, Sean. Great to work with you.